Well, I did not anticipate agreeing with Mr. Whalen quite as much as I do. The challenge of the last 3 years has been very similar to the challenge of, in my mind, of the late 1920s, early 1930s, in that we had a new financial instrument at the time. Then it was options and calls and puts and buying on margin, and we were all very confident that this would be the key to creative finance. And then the stock market crashed, and we learned all of the potential dangers with the thing that we had invented, and that we got very confident in this last decade with securitization of mortgages, and that it was all going to work really well, and that everybody could have a mortgage in the 5–6% range, interest rates that our parents told us we would never see again. And I have friends who had the first negative amortization mortgages in the early 80s, because that was the only form of mortgage you could get when interest rates were in the high teens, and that we had created this securitization, and that nobody owned, no banks owned a mortgage, and banks were very happy coming out of the 1970s, no longer having a misalignment between their assets and their debts. And so we get to this point where we really don't know who we owe when we can't pay what we owe, so that you have the foreclosure crisis of paperwork, and you have these robo-signers, that whole controversy that is mostly about not being able to figure out who we actually owe our money to, which in some sense is a blessing to those people who can't pay their mortgage, because at least they get to live in the house they can't afford. Well, I guess what I would say is that I'm in agreement that the model that is based on somebody else loaning us money through creative financial means so as to buy something we can't afford using creative financing is not a model that we should try to resurrect and to come back to. However, I also don't think that necessarily combative trade policies that are it's essentially with China saying, please, 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 please lower your your exchange rate, and no, we really mean it. We'll print more money than you can print, and it turns out that they can print more money than we can print, and that we are each in a race to try to have the weakest currency on the planet. And that is a race that we can all win, because we all have ink and we all have paper, but we will all lose because of eventually that inflation will come home to roost. Now, I think I'm in somewhat more optimistic than Mr. Whalen in the following sense. I think that the manufacture of consumer electronics is not just about Wii consoles in entertaining ourselves. I think it is about the efficient manufacture of goods and the more efficient distribution of services. The biggest innovation driver of the 1980s was not the personal computer, though it was the biggest driver of investment spending. It was when we figured out how to take the box and make ourselves far more efficient that it became the driver of productivity during the 1990s, the productivity increases in the 1990s. I think that the small electronic devices, if we could get our students to focus less on Farmville and Facebook and more on productivity enhancing aspects of those devices, will ultimately be something that will propel us into the future in terms of increasing productivity.